Hi, this is Erik Epp, and this is part 2 of stocks versus options. If you have not seen the first part, please go to the website at the bottom of this slide, find the video of the first part and watch it first. This is a risk disclaimer we're required to post by law. Please take your time to read it, review it, and fully understand it. So are options riskier than stocks? This is what most people believe, and this is what most of the media will tell you. Well, here is a quote of mine. Beware of the man who forms his opinions before he examines the evidence. This was published in a book, Think and Grow Rich, that took the author 20 years to research and complete, and was first published in the 1930s. So using the same scenario and example as we used in the first part, if one normally buys $5,000 worth of shares, but instead buys $5,000 worth of options, the options are riskier. However, if one bought only the number of contracts that correspond to the number of shares one can purchase using the same amount allocated, the options are less risky. How about a third option? What if one takes the amount of dollars she or he is willing to lose if the stock price went against her or him, such as a 20% stop loss, and uses that same amount to purchase options? Let's assume a normal 1,000 shares purchase, using the same Dell price as in the previous presentation of $13.79 per share. To purchase the shares will cost $13,790. Or 20% of that amount equal $2,758, which is a maximum one is willing to lose on this trade. Using the same expiration months as we used before, which is May 2011, and the same strike, which is 13, and the same option price of $1.58 per share, taking the 20% or the $2,758 we calculated in previous slides, we will be able to purchase 17 option contracts, which will actually create an actual cost of a little less than $2,758. The rest of the cash, which is $11,104, can be invested elsewhere or simply collect interest. So while matching the total risk between purchasing option and purchasing stocks, i.e. we're willing to lose maximum of $2,758, the options trade is actually turbocharged, now controlling 1,700 shares, which is 17 times 100, or 70% more than just buying the shares, which in this case would have been 1,000 shares. So if there is a gain, it will be 70% larger in dollars and much more in percentage. And since I have not seen or read this third option anywhere, I'm calling it the KISS option, and pun intended. So once again, one of my favorite quotes: beware of the man who forms his opinions before he examines the evidence. Thank you for watching this video, and thank you for visiting our site. Please keep coming back to kissoptionspix.com, or you can call us toll free at the number posted in the video. And thanks for watching, and until next time, hasta la vista.